Hello, everyone. You're all very welcome to Thursday's US market open as we approach the US trading session. So, of course, today all eyes are turned to the US markets. We talked about it yesterday in our.
Afternoon. You're all very welcome to Thursday's US session market open. Apologies, I've had a little bit of a technical issue there. As you can see, my camera is unfortunately not working. So we're going to have to just navigate around that today. So more broadly, as we talked about it yesterday on Tuesday in our Zooms, and obviously Chris has alluded to it too on Tuesday in his YouTube, end of summer markets, we are expecting that kind of the volatility to kind of return. We talked about it yesterday, the volatility off the back of what was a fairly, very strong month-end close for August. We mentioned it yesterday, the indices were starting to falter, and that has become really the norm this week. We are seeing the broader US stock markets continue to grind lower. We're seeing indices and risk assets as a whole continue to remain pretty much risk averse. And I suppose the common example of that is if we look at any of the primary indices of the stock market, you'll see the S&P following that initial breakdown yesterday into really last night's close. We have seen a very clear replica today with US indices continue to grind to the downside. And we talked about it yesterday. We talked about it Tuesday. All we're effectively doing is mitigating or returning back to where we were before that massive grind up into August month end, where we had those indices rally. We saw the S&P rally, we saw the NASDAQ rally, we saw the majority of trading indices grind higher. And of course, this week we are getting that filtration following the highs of the month. We alluded to it yesterday in our community Zoom. For the highs of the month on the S&P, on the NAS came at NFP. Since then, Monday, obviously with the Labor Day, Tuesday, Wednesday, Thursday of this week, there has been that steady filtration of downside price action, really mitigating all of this buy side bias that we saw into month end. And you see it as well. If we look at the S&Ps moving across to the NAS, you'll see a very similar formation, very, very aggressive move to the upside. And look, as we see it today, the NASDAQ is also running significantly lower. So we're seeing the NASDAQ off from where we were on Friday at NFPs. It's off about 300 points. You're talking around about 1.5%. Almost 2%. We're seeing obviously the Dow Jones continue to navigate to the downside. We saw that yesterday and Tuesday evening. We saw continue yesterday into the open. We're seeing a little bit of a steadying out in the Dow Jones at this 34,300. But again, we saw it fairly evidently on Tuesday. That heavy selling Tuesday was repeated yesterday, and on today, obviously the indices again remain on the back foot. So what does that actually mean for the broader markets as we begin September? Well, we know the yield story, the DXY has continued to remain or keep a lot of its bid. You only have to look at the DXY continue to grind higher in the risk aversion place. So of course, obviously with the higher DXY, with the stronger dollar, does obviously mean that indices broadly are going to struggle. And of course, that's exactly what we've seen. We've seen that market correlation play out beautifully. Indices of dollar strength very much continue to play out as we now sit at 105 on the DXY. And of course, today, although we did have a stronger move on Friday, initially on the yield story, we have seen that grind continue to play out Tuesday and Wednesday of this week, with again another pop yesterday evening. We are still holding underneath 4.3% today, but it'll be very interesting to watch to see if this yield story continues to grind higher, given the fact that we obviously have the dollar story very much continue to maintain that upside progression. And of course, if you go out to the daily, you'll see that as well. We've completely blitzed through the May highs. So the highest point we've been really since the latter end of May has been very, very quickly been taken out. And now we approach, or we're heading in the directional bias back into those March highs. Now on Tuesday, we mentioned the idea of and last week briefly in our calls, but the potential for the dollar to pick up some strength ahead of some turbulent fundamentals coming in the next 6 to 12 months. And of course, you've got the end of this year, obviously new policy for 2024 by central bank. You've got US elections not too far around the corner. So market participants are very much pricing that in ahead of time. So as we see it at the minute, risk aversion is still very much the order of the day. We are seeing that very, very clear and very, very paramount in the financial markets. The dollar story obviously continued to hold residual strength from those middle of July lows. That's been a very, very strong recovery in the DXY from those lows in the middle of June. And you're only talking less than 2 months later, we're up a whole 6 basis points on the index by the DXY, which has fueled that euro dollar decline. It's fueled that cable decline, which we've seen very, very evidently over the last number of weeks or so, that cable price coming all the way back into this 124.50 level that we've talked about in previous weeks. And of course, euro dollar getting back into 107, and that's been something else that we've kind of talked about this week to see how would the price actually react at 107. Well, at this point in time, the euro dollar dynamic is still very much poised to the downside, albeit at some pretty important price action structural levels. Cable is not too far behind it. And of course, it's really then setting the tone of, well, we know the indices are off. We know the indices are pulling back. We know the euro dollar. We know the cable is pulling back. We know we've stronger yields. We know we've stronger dollar. And then it's just a case of identifying the market structure, identifying the market sentiment, and then being able to apply that in a logical scenario broadly beyond that. So that's kind of where we are into the US Open. Now, if we look at on the day, just I suppose isolating, obviously, as I said, we can see that kind of gradual grind higher through the morning, really from the London Open. DXY marginally higher. Of course, the big telltale sign is the fact today that we are seeing these indices, the S&Ps, following that kind of dead cat bounce into last night's close. Indices very, very clearly breaking through 44.50. S&P is still grinding lower. We're 20 points lower through that area. And of course, if you were to look at it now, you would certainly assume that there's probably a bit more downside to come in the S&Ps. You would be really looking for price action now to continue grinding higher. Can we test it? Can we see that continued sell-off really back into this 43.70, 43.80? Mightn't necessarily come this week, but the way the price action is identifying, you'd certainly like to see price action fill a little bit more of this imbalance. Now, as we look at it, short-term area of interest, there's a bit of an area here around 44.30. We have made an aggressive breakdown. Yes, as we said, we've had that secondary break today. It would be interesting to see if there's maybe a short-term influx, because of course, if you go back to to Tuesday, the 29th of last week, we had that massive pop on the Jones numbers all the way up. We had that little bit of a pause. Price action has come all the way up. It's consolidated, peak high on NFP. We've started to slide. And yes, of course, yesterday and today, markets has returned all the way up in this nice little N-shaped formation back down into this area. So I would be watching that 44.30 level today with interest, 44.35, to see if there's any maybe short-term rally really back up into this area up here, right? Because of course we've had that aggressive sell-off yesterday. We've had that secondary sell-off really through European Open from kind of 6 o'clock this morning. We started to see that's really slide. And since then, we've obviously continued to grind lower. So if I'm on the sidelines and looking to get in, I'll be very much playing the trend, which is obviously clearly bearish this week. You'd be looking for kind of short-term recoveries, fade those short-term recoveries, like kind of what happened here last night for that next run up lower. And of course, yesterday at 2:30, we had that very, very clear break at 3 o'clock. And then of course, the ISM's BOC was adding more fuel to the fire for that SMC breakdown. But of course, we had a fairly good idea once we've broken through that price action was more than likely going to be priced to the downside. Now, as we look at 2:30 today, we've just gone into the open. We'd expect to see a little bit of a rally. Can the price action fade a little bit of this initial low? Can we see a short-term recovery back into 44.50? That is really what I'm focusing on today on the S&Ps. Now, we'll look at the other indices in a moment. But if we pick apart the S&Ps firstly, on the market profiles, just for a moment, you'll see that on the point of control, it's just marginally above 44.50, 44.56. The value low is at 44.80. We are trading comfortably below that region. So we are seeing a little bit of a fade. It would be nice to see, can the price action get back up into this value area, and then maybe look to see if there's any sort of sentiment fading, initial spikes fading, and then looking for value in terms of selling opportunities from this region. So that's exactly what I'm looking at today myself. As I said, 56 comes in pretty nice. There's this region here in general. So my point of view would be somewhere between kind of 50 and 55 would be ideal in terms of if there was a brief pop, that would be kind of where I'd be prioritizing selling opportunities from should that happen. So obviously let's wait and see. Thursday, anything can happen. We may well potentially just see price action slide through 44.30s and continue to grind lower. If that's the case, well, there's not really much. If you're looking for risk, reward, and value, there's really not much you can do that if you're on the sidelines. So we just have to be kind of conscious of that as well. In terms of the NAS, it's just had that very, very, very clear decline. So we had that initial decline lower yesterday, very clear decline again today. Markets have just puked, breaking down through 300s, breaking down through 150s. And of course, I did say it yesterday, price action was very much poised to the downside. On a clear break of 400s, I mentioned on Tuesday as well, we'd really be looking for that trend to identify itself in terms of that bearish selling coming back into the NAS and really looking at 15,000 as the benchmark. And at this moment in time, we are only about 140 points away from that. So at this point in time, I don't expect the NASDAQ to let up in terms of its selling. You might see a brief pop, but are you going to see enough of a pop back into your value area on the day? And your value area on the day on the NAS is probably coming in around about 300s because you've had that such a decline. You'll see it now in a second. Very, very, very clear decline. Low volume, single prints. We are seeing a little bit of a leveling out. So if you are looking for selling opportunities, you probably want to be looking for really a short-term recovery back up into 300s. And of course, the 300s would sit fairly nicely, but where we had that little bit of a pause last night, we had that little bit of a break this morning. So that's really there kind of where you'd be looking at to see, right, can the NASDAQ get a short-term recovery? If so, can we identify selling opportunities from around here to really hammer this lower again? And that's really what I'd be looking at there now on that one. Given that the trend at the minute is obviously very, very clearly risk averse, bearish for stock market indices. And lastly, if we look at the Dow Jones, as we said, we had that massive pop into month end in the Dow Jones. We had a bit of consolidation, but really since Tuesday of this week, Tuesday evening, we identified it in our call live, you could really start to see the Dow Jones coming under pressure. And we did mention the price action could potentially come lower. We did mention this area down here around 250, 200. We have found a little bit of a bottom around threes. So I guess now we're starting to see the price action level out because we know the selling on Tuesday was more pronounced in the Dow Jones than it was in the other two. Yesterday, there was that follow through. Today, we're seeing that little bit of a pause after very, very heavy selling from Tuesday. So it did drop from 900 approximately down to 300, which was a 600 point drop through Tuesday's trading session and Wednesday's trading session. So it does look like the Dow Jones is holding up relatively well at the minute in comparison to the other two. Would have a similar bias to see, well, can it get a short-term recovery for the next run down lower? And that's exactly what we'd be kind of looking at all three. So the S&Ps is kind of doing as we expected. Let's see if that plays out into 3 o'clock and through the course of the afternoon. Let's say the first half an hour, can we get a short-term recovery for selling this evening? 3 o'clock, I think by 3 to 3:15, the next half an hour or so, we're going to have a fairly good idea in terms of directional bias for the rest of the afternoon in that regard as well. All right. So that's pretty much it in terms of the stock markets, S&Ps, NAS, Dow Jones, etc. The dollar story is obviously still remaining to be bid to the upside. The FX plays is going along with what we're really seeing in the dollar. Euro dollar back to 107. If you look at dollar yen, obviously with that bullish DXY, we are still seeing this, shall we say, USD JPY setup to continue grinding higher. And we talked about it last week about coming up here into this 47.85, really extending up into where these two parallel lines are between kind of 148, 147.85 and kind of 149. We have come off of that level here at the minute this week, that 147.88. If you look at the dollar yen up here, we are starting to show a little bit of a consolidation, like kind of similar to what we had here, but of course, massive volatility. And then we spiked all the way up into that, all the way back up into that email. And I think at this moment in time, it's very, very clear that I think it's probably starting to dilute a little bit. But of course, with the DXY, we need to be very, very careful with that, because of course if the DXY continues to, let's say, explode and we see 106 on the DXY, that's very much going to have to bring in the BOJ, because what happened over here last winter, the BOJ got involved when dollar yen got to that 150 price point. So obviously being aware of that. European indices, just the final kind of crackdown on European indices today, obviously given the data. We'll look at the calendar for the rest of the day in a moment. You can see that the Euro Stoxx is still holding in there just about. The DAX is still holding in here at 15,700. We talked about the 15.7s. The FTSE has obviously gone very, very choppy the last few days. If we just clear up and just go to the higher time frames for a second, we did have this kind of short-term value where we broke down aggressively to this 73.80, 7,400. We are now spiking back up into this 74, 75, 74, 80 level. And I suppose at this point in time, we'd look to see, well, if the cable is continuing to falter to the downside, we still see that cable pressure. Can we see maybe the DAX, the Euro Stoxx, the FTSE get a little bit of traction off of those weaker currencies in Europe? Well, at this moment in time, let's wait and see, because of course, the S&Ps, the NAS, the Dow Jones this week has been fairly bearish Tuesday, Wednesday. Now, of course, as we said, 3 o'clock is going to tell a big tale. So let's evaluate the price action by 3:15, and we'll have a fairly good idea as to where the price action is going to end by tonight's market close. All right, that's pretty much it, everyone. Trade safe as always. If you have any questions, do feel free to ping them into the community chat, the Discord group, or discussion group, should I say. And if there's any questions or points of interest that you feel that are relevant, or you have any questions yourself, please do feel free to raise those as well. Have a good afternoon, everyone, and trade safe.